Hi, this is Danny Kenny, a financial planner. I wanted to record a video to talk a little bit about President-elect Joe Biden's tax proposals and what those are looking like going forward. Now, keep in mind that with the election recently passed and the upcoming election in Georgia still kind of on the docket, we don't know what Senate control is going to look like. So all of these proposals are just that, at this point, proposals. And if it turns out that the Republicans retain control of the Senate, the likelihood of these proposals passing is pretty slim. So portions may come into law. Who knows about the whole thing or which portions? But it's good to know what's going on in the proposal stage anyway. The other point to consider is that presidents don't write law. So any of this tax law change or any law change, generally speaking, comes through the House and the Senate or Congress, broadly speaking. So these are proposals put forward by Biden and Biden's team. It might guide some of the negotiations and kind of wish list, so to speak, coming out of Congress. But just a starting point, so I think it's worthwhile talking through. So the main point here is for those with income over $400,000, they're talking about pretty significant changes. And I'll talk through some of those in a moment, both on the income side and the deduction side and the payroll tax side as well. So really from three different angles, looking to effectively raise income tax rates. So those are the big takeaways. I'll walk through the specifics here in a moment. Let me share my screen and we'll dig into that, and then we'll talk about some of the other changes that are proposed as well. So this is looking at current tax rates here. So, this is, if you can see the whole screen now. Let me try and move this bubble a little bit. So there we go. So this is looking at the top here. This is married filing jointly tax rates. Bottom is individual tax rates. So this is provided by Michael Kitces. I'll actually link to his article in the description of this video as well. But looking up here at the top one, here, this is showing at the $400,000 level of income. So proposed rates are looking at $400,000, whether you're individual or a joint filer. So that's a pretty significant marriage penalty. If you think about it that way, you're subject to that higher tax bracket at essentially half of the income if both spouses are, earning that level of income, right? But this is saying at the $400,000 level, the maximum or the top tax bracket would be there at 39.6%. So that's what the rates were when Obama was in office, and Biden coincidentally was in office as well as the vice president, right? So looking at taking those top tax rates back up to that level. So that's that. Currently, that would be right in the 32 to 35% range for a married couple, and squarely in the 35% range for an individual. So really we're talking about a 2.6 to 4.6 increase in tax rates with this proposal here. So the other piece is thinking about wage earnings are currently subject to FICA tax or Social Security taxation only up to currently this year $137,700. So that's the current regime, and that kind of max number of 137 gets increased with inflation each year or so, but it's not significant, a couple of $1,000s, right? One of Biden's proposals is to kind of create a donut hole, so to speak. So up to 137,000, say you're paying Social Security tax, which is about 6.2%, right? And then you're not subject to tax above that. Well, in Biden's proposal, earnings above 400,000, this would be on a per person basis, but above 400,000 would be subject to that 6.2% tax again. So there'd be this intervening portion of your earnings that aren't subject to that, but up above 400 would be subject to that tax again. So for earners earning over 400,000, that's an additional 6.2% of tax. The other piece here, this another visual I've got. Great, so it looks like you can see that now. So this is thinking about the qualified business income deduction. So if you're a business owner, pass-through business, meaning that you're business income gets taxed on your regular tax return, not a corporate tax return or anything like that. You currently get a 20% reduction in your taxable income. So that was made as a part of the 2017 tax bill to kind of coordinate individual tax brackets for business owners with the corporate tax law change that lowered the corporate tax rates down from, they reduced it, I think it was 28% down to 21%, right? So to kind of equalize that with individuals, they did this 20% reduction in business income. So effectively speaking, somebody that's in the top bracket, currently at 600,000 here, would be paying 37%, right? The effective rate on that business income is a little bit less. It's 20% lower. So it's really, about 29.6% here in that top range. So in the Biden proposals, he's talking about eliminating that 20% reduction at this $400,000 income level. So effectively, that's going to increase this, was in the 27% range for somebody earning 400,000. That's going to be up to 39.6%. If you are in this 37% bracket and effectively paying 29.6%, that's going to be a 10% increase when you're going from 29.6% to losing that deduction, and your marginal tax rate bumps up to 39.6. So somewhere between say 12.6, 10.6 to 12.6, something like that, effective tax rate increase there. So those are the two things I had visuals on. Now I'm going to stop sharing my screen and talk through some of the other changes. So talk through the changes on the tax rates, right? One of the other proposed changes is reducing the value of itemized deductions. So currently you have a deduction for your charitable contributions, right? And it's lowering your taxable income at the marginal tax bracket. So you're in the top tax bracket of 37%. Say you give $100 to charity, it lowers your tax bill by the effective tax rate times your deduction. So you're getting a $37 tax deduction or tax reduction rather on the tax bill there. So that's how they currently work. Biden's proposing to cap those deductions, the effective tax benefit, at 28%. So that's another reduction there. If you're in the marginal top tax bracket, you're talking about 11% or more in increased taxes on those otherwise deductible expenses. So all of those changes, there's a little bit of planning opportunity, not a ton. The biggest opportunity is to both pull forward income, so you're paying a potentially lower tax rate on it if you're above 400,000, and pull forward deductions as well. So in the past, what we've tried to do is kind of defer income, wait until next year to earn income, pull forward deductions to this year to kind of lower current tax income, and today defer income, pay tax on it on a later date. But if we can pull both things forward, pay, get the best benefit of the tax deduction and the lower tax rates, that's the best outcome if you can control that. If you have a bonus eligible to be paid in December or January, pull it forward to December. If you're able to pay your January mortgage payment on December 31st, that might get you a higher deduction this year if you're above 28%, right? So some other proposed changes are a flat tax credit for deductions or contributions to retirement accounts. So currently you're getting your marginal tax rate deduction, but what Biden's proposing is leveling the playing field. If you're in a 12% bracket, you're probably going to get a higher tax credit for that contribution. If you're in a 37% tax bracket, you're going to get a lower tax credit for that deduction. They're floating a 26% rate would be equalized, meaning the tax benefit would equalize the tax cost, so it'd be kind of revenue neutral, right? So the planning opportunity here is if you're below 26%, consider using the traditional or the deductible contributions. If you're above 26%, consider using Roth, because you don't want to get a 26% credit on a traditional contribution and then pull it out when you're in a 32% bracket later and end up paying more taxes on it. So I think it's worthwhile digging into that together, you and I, to work through that to see what makes the most sense there. Some other things, expanded tax credits, so child tax credit, dependent care credit, first home buyer tax credit, and caregiver credits have kind of been proposed to be expanded. So spending more money in that sense, offsetting the increase in revenue from the tax rates, right? Some other items are long-term capital gains. They're proposing taxing those at ordinary income rates if your income is above $1 million. So that's pretty significant change going from, say 23.8% today, 20% capital gains, 3.8 Medicare net investment income tax, up to 39.6. That's a major change in tax policy, so something to consider there. And finally, the elimination of the step up in basis if you pass away. So historically speaking, you bought something at $100, it's increased to $500 in value over the course of your life. You pass away, your heirs receive it with basis of $500 instead of that $100 basis that you purchased it at. So that might be not something we want to plan for your death per se, but something to think about when you're thinking about capital gains and assets that you're going to pass on to your heirs. So that kind of summarizes the main points there. Once again, I want to hit the point that election's not decided on the Senate yet. So don't know if these things are going to come to fruition or not. And then finally, it's pretty unlikely that any of these tax changes would be made retroactively. So in the best case scenario, if you're pro tax law change, would be passing this in early 2021, but it's unlikely that they would apply it backwards to 2021 per se. It might be effective the date of signing, or it could be effective January 1st, 2022. So there should be some time for planning opportunities and thinking through that. So look forward to meeting with you and talking through the opportunities that apply to your situation. Sorry for the super long video. I'm going to link to Biden's tax plan, the summary by Michael Kitces, which is excellent as usual. But please reach out if you have any questions. Take care.